Good morning, everyone. I'm Barbara Goldberg Goldman. I am founder and co-chair of the Affordable Housing Conference of Montgomery County. I know many of you have joined us for our 29th Annual Housing Summit on October 2nd, and again for the October 30th panel on economic and housing uncertainties. And we're delighted that you're with us again today. I do want to take a moment of silence, if you don't mind. We learned this morning that our honorary co-chair, who had been with us for 30 years, Senator Paul Sarbanes, has passed. Senator Sarbanes was our guiding light. He was our advisor. He was our supporter, and he was with us from day one. It is with a most heavy heart that we are mourning his passing. His legacy will live on forever. The Affordable Housing Conference has two separate awards, the Paul Sarbanes Excellence in Community Service and the Paul Sarbanes Excellence in Public Service. So he will stay with us forever. And we hope to carry on all that he held dear. He was a real champion and he is our hero. So for just a moment, if you don't mind. Okay, those of you joining for the first time, I think you're going to find today's session very thought-provoking and informative. With the COVID pandemic surging and placing enormous financial strain on housing burdened tenants and homeowners, as well as the multifamily property owners and landlords here in Montgomery County and across the country, we wanted to continue the conversation with this very distinguished panel of affordable housing executives. Guided by their expertise, experience, today we examine the challenges and the private and public sector solutions that help the community through these most difficult times. Before I introduce our distinguished moderator, we invite you to submit questions using the Q&A button. We'll save time towards the end of the panel to answer as many questions as we can. We want to welcome once again to our family. Actually, he's a member of our family at this point, Barry Zegas, who will moderate this panel. Barry and I have known one another for many, many, many years. I'm afraid we're dating ourselves. He is the senior fellow and former director of housing policy at the Consumer Federation of America. He consults with housing and community development nonprofits and foundations through his firm, Zegas and Associates. Barry served as Senior Vice President for Community Lending at Fannie Mae for over 10 years and is also as President of the National Low-Income Housing Coalition. He is a trustee on numerous corporations and nonprofit boards. Barry, welcome back. Over to you and introduce our panels and we'll get underway.
Barbara, thank you so much. It's great to see you again and all of our colleagues. Thank you for those kind remarks about Senator Sarbanes. He was truly a leader in our field and someone many of us looked up to over the years as we worked with him. It harkens back to another time when members of Congress worked together across the aisle to adopt important legislation that really affected the lives of people in a positive way. His passing is a great loss to all of us, so thank you for that. It's my pleasure to moderate this morning's panel, and I want to welcome all of the folks who have joined us. I see on the Zoom that we have over 60 people with us, which is terrific, and we're going to try to give you a good experience this morning reviewing responses to the coronavirus pandemic in the housing and community development field. We have a great panel this morning. I'm going to briefly introduce each of our panelists and then return back for giving each of them a chance to share some thoughts on these topics. Brian McLaughlin is with us. He's President and CEO of Enterprise Community Development. He's got many years of diverse experience managing real estate business lines across the nonprofit, public, and for-profit sectors. He has public sector experience as Assistant Secretary for the Maryland's Department of Housing and Community Development, was a veteran of Fannie Mae, as am I and Frank, and other private real estate experience. Artie Harris is Vice President of Real Estate for the Montgomery Housing Partnership and is responsible for their property acquisitions and managing the day-to-day operations of their real estate team. He also has a broad range of development experience, both land and building acquisitions, site entitlements, senior and multifamily housing projects, and tax credit and conventional financing. He's a LEED certified developer and has nearly 3 decades of experience developing multifamily housing and retail facilities. Prior to joining the partnership, he was a vice president at Bazzuto Development Company, one of the county's foremost developers. Stacy Spann is executive director of Housing Opportunities Commission of Montgomery County, which of course provides and develops affordable housing and supportive services to enhance the lives of low and moderate income families and individuals. Stacy previously led housing organizations in Howard County and in Baltimore, and is an adjunct professor at University of Maryland's real estate program and teaches its capstone course. And Frank Desmarais, a former colleague of mine and a friend from Fannie Mae, is DHCA's deputy director and has managed and developed a broad range of local and national programs in the housing industry since 1979. Prior to joining the DHCA, Frank served as the Home Purchase Assistance Program Manager at the Washington, D.C. Department of Housing and Community Development, and has also held management positions at Fannie Mae, Freddie Mac, and at MANA in the District of Columbia. So as we look at what's been happening around us in the pandemic, I want to start by asking Frank to sort of share with us some thoughts, particularly about what the most urgent short-term needs that Congress and the administration should address in the coming 90 days, and priorities for the legislature, and also give us a picture of what's happening in Montgomery County overall in terms of eviction filing, support for renters, and aid to beleaguered homeowners. Frank, welcome.
So thank you, Barry, and welcome everybody. I'll speak to the local experience, but really from our working with our regional partners and nationally, I think these are issues that are affecting local governments across the country. The response mode, we look at the current crisis as, like we would any natural disaster. We've got to respond before we recover. And so we're still in response. And so in the response phase, we need to keep people from losing their housing. What we've seen with the delinquencies and what we believe is the extent of delinquencies, we need more rental assistance funding. So at the federal level, the funds are necessary to support the state, local governments, distributing these funds out to the tenants who are behind on rent, but really it goes to the landlords who are then able to sustain their property. So it's critical that the federal government increase and expand the existing pool of rental assistance. We believe the need in Montgomery County, and we've committed already about 33 million of federal and local money and state money that's come to county residents. We believe there's a need for at least double that. So we believe it's 40 to 50 million additional assistance needed over the next 6 months to get us through this response mode. These funds have come with federal documentation requirements, income certifications, COVID impact requirements that have presented substantial hurdles to a lot of our residents. So one of our recommendations and an area for focus is how to adjust the eligibility documentation requirements to be sensitive to and reflect the challenges of the residents who cannot get documents proving to the extent desired the impact of the COVID on their income losses, and even documenting income is very problematic. So we're very much focused on the federal government continuing to make those funds more accessible and available. We also need to buy time. The CDC moratorium on evictions only lasts to the end of this year. The governor of Maryland has a moratorium on evictions, which lasts until the end of the state of emergency. That is an uncertain time period. We believe the moratoriums are necessary to buy time for tenant residents to recover income, for them to work with their landlords. We are seeing many tenants burning through their reserves. We believe the exhaustion of federal extra unemployment benefits and other benefits at the end of this year are going to create significant hurdles. So we're looking for the state and the federal support in helping to buy some time on that. In the local eviction situation, Maryland courts did not hear any failure to pay rent cases from April through the end of August. It began in September. And September and October, we're really just catching up on mostly pre-COVID filings. The CDC moratorium, the governor's moratorium only applies if you've had COVID income losses. They started hearing COVID period failure to pay rent cases in November and then shut back down. So right now, the state of Maryland is not hearing any eviction failure to pay rent cases through January 15. They've also suspended hearing the tenant holding over cases, which are different, and had presented an area where evictions were being ordered for tenants whose leases expired and landlords were not renewing. But now we have a stay on all new eviction filing activity through the middle of January. Some evictions will continue to occur for the possession writs that were issued pre-shutdown. But as a community, we have a window of period that we're looking to take advantage of and to help the tenants and the landlords find ways to work together. The county's funds for rental assistance authorized over the summer have been distributed and ramped up in distribution October, November into December. Some will flow into January. We have some additional federal funds that have been just recently appropriated to rental assistance. So we're going to continue making payments. It's going to buy us some time, but until we can get through that, we're going to have an awful lot of uncertainty, and we need to resolve that as best we can with some additional federal support. One of the key things that we're focused on is how to connect the landlord and the tenant and help them work on repayment plans or arrangements. And as a community, we think rental assistance will only cover a portion of what's owed and what's needed, and that we've got to make that effort with our nonprofit support and our county resources and others to help bridge those gaps. And the last thing I just want to leave out there for the next phase of dealing with this is the recovery. We're going to have very significant damage in some very specific communities, and the home CDBG and federal assistance that can be made available and targeted, expansion of longer term rental vouchers or rental support is going to be necessary, and target assistance to the communities most clearly and obviously impacted. Every community in the country has done a pretty good job of identifying where that is, and recovery is going to require that we then refocus our energy so that we don't see some of the same residuals that we saw of the last crisis, where we left a lot of communities behind, especially those most hard hit at the lowest income and the communities of color. So the financial and the regulatory and the legislative assistance needs to focus on how do we rebuild, increase the tax credit allocations, and really help us do long-term recovery after we get through the response mode. So with that, back to you, Barry.
Frank, thanks so much. That was a terrific overview, and it sort of, Stacy, puts you right in the sweet spot here, because Frank has been talking a little about some of the obstacles of getting assistance to tenants, some of the challenges that communities of low-income people are facing. HOC, of course, is a large participant in this market. Can you talk some about how you're seeing the role evolving and what role your organization and others have played in helping to bridge some of these gaps, and also how you're looking at the management of what's likely to be, hopefully not, but looks likely, a wave of evictions as well as foreclosures?
Well, that's you realize that's not a 5-minute conversation, but I'll try and keep it brief. So first, good morning to fellow panelists and everyone who's listening. So I wish I could say that this is a sort of we at HOC thing or a we in Montgomery County thing, because then it would be more localized. And the issue is that the world has changed and continues to change remarkably as we try and work through this. And I think what Frank mentioned about local government participation and even what we need from the federal government goes. It's noteworthy, and I won't rehash it, but in terms of what we're doing, I mean, obviously we're adhering to the eviction moratorium, and I think that we need to continue to adhere to the eviction moratorium. The challenge, as you note, I mean, we've talked about foreclosure, we've talked about eviction, and everyone believes that there is a tsunami sort of awaiting us, and I think I want to highlight the fact that it really does go to the challenge we have with connecting to customers, right? So we think our only job is to lease the domicile, and then we're done. And something like this pandemic has us rethinking the way we have to interface with customers, and that can't be a sort of first of the month thing. Can't be the case when we finally had enough and the writ has done what it needs to do, and we get the opportunity to finally displace the family. It really, we have to be more thoughtful about it. We have to be deliberate, and I think that takes not just, again, this is not just an HOC thing. This is how we interface with the one opportunity that connects us to every single thing else: housing. Doesn't matter if they're a homeowner, doesn't matter if they're a renter, doesn't matter if they're a dependent. And so I'm dismayed because it highlights probably the largest failure in the system. And that is the fact that we don't actually have real relationships with our customers. It's transactional. And so how do we fix that and begin to deal with what is potentially an eviction crisis, which will cripple these United States? I mean, that's a fact, right? We started to see it in the last recession. And so I think the first thing is kind of top down. When the federal administrators are thinking about how to help, we can't just help American Airlines. We got to have direct to consumer, direct to taxpayer supports. And that's not simply stimulus, right? It is rental assistance. And then when we are disseminating that at the local level, that's potentially a greater opportunity, not simply to capture data, but to start or restart a relationship with folks, which we just haven't had. And so I know I'm giving you something a little different than what you maybe bargained for, because there's no good technical answer. It doesn't exist. I don't want to put a family out. And so hopping on the panel and saying we want to avoid it isn't the same thing as actually avoiding it. It's not the same thing as generating the real relationship. And so when this rental assistance, I'm trying to be an optimist here. When this rental assistance comes, we have to take that opportunity to really try to work with families. And we can do that the same way we're having this conversation. We don't actually have to show up in their house and potentially spread the virus. And we have to take that opportunity. And we also have to understand that this is one part of a huge puzzle. And all of us are partners. We continue to work together. Sometimes we're on opposite sides of the table, but it's all in an effort to make sure this community houses people well, right? And so when we're thinking about that, we actually have to think about the touch points that allow us to do that. So I'll kind of stop there and let other folks weigh in or move on to the next panelist.
Thank you, Stacy. That was great. Let me just quickly ask, one of the things that I think when we spoke last time in the earlier panel was that the supplemental unemployment insurance and the stimulus payments had been a big buffer that it helped tenants pay their rents. Those are now either some of it's already expired, much of it is about to expire. Can you talk about what HOC has seen in terms of the impact of those payments on rent collections and what you're anticipating is likely to happen if this aid is not extended?
I appreciate that. So when this thing first hit, we embarked on a series of stress tests like everyone else. And so I thought that June would be our worst month. And in fact, we realized somewhere in the 80-ish, high 80% range on rent payment. And similar for July, right? Little worse for August, little worse for September. So what it essentially offered a parachute, right? The problem now is if we go a month or even 60 days without that parachute, it's going to be catastrophic, right? So we're not necessarily talking about seeing real issues in sort of first 90 to 120 days. but it is the kind of impact from a rent perspective, from an income perspective, that destabilizes an organization into the next year or even 2 years. And so what we're trying to do is avoid that. And I again, I am a proponent for direct to consumer stimulus. We've got to have that in place, and I think that includes the rental assistance. As the year has worn on, every month it's a little less. There's certain properties where it's I'm scratching my head thinking, oh no, this is going to be a problem that we're working at for the next 18 to 24 months. So, and I expect if we get to December 31st and nothing is done, or very little is done, it's not just this county. This entire region is going to have, an incredible challenge on its hands.
Thank you, Stacy.
Sure.
That's terrific. Thank you, Stacy. And apologies for my moving around. For those of you who've noticed that, my grandson just showed up for his daycare at our home today, and I had to move out of his line of sight. So apologies for that.
So Barry, I wanted to comment on something Stacy said,
Artie,
which we found out that that has been an issue during COVID, and we all need to address it once. A better system when post-COVID is that communicating with residents, and it is so, we realize we're typically a knock on the door kind of company to understand that residents need you, and you just can't do that during COVID. And if you have a 400 unit building and it's spread over 10 acres and you need to contact residents and understand what their needs are, there needs to be some sort of a better system. So we post-COVID, when we're going to talk to a lot of other developers and property managers, see how they're doing, but there needs to be a better system where you like the county system. If you just even want to provide alerts or something, how do you get to the masses of your residents very quickly and to provide them with information, and if you can't go door to door? So that's one of the things we will work on and try to be better at post-COVID.
Great, Artie. Thank you for that comment. Brian, this sort of brings us right into your sweet spot. Enterprise operates across the region as well as around the country. You are involved as a sponsor of many properties, but also serve a very important intermediary role. Can you talk a little bit about what you're seeing about how Enterprise, other similar intermediaries, partners, banks, and lenders, how are you planning for what's coming, and what role do you see Enterprise and your other fellow organizations preparing for that in early 2021?
Thanks, Barry, and hello everyone. It's still morning, so great to be with you. Thanks for the question. I think kind of like Stacy said, I'll try to keep it brief because these are topics unto themselves, right? But Enterprise, I think, like everyone else, is really trying to make sense of this rapidly fast-changing reality, and I won't purport that we've made much more sense of it than any of the other experts and thought leaders and folks who are just passionate about these issues. There's too many dimensions in real time that are moving, and there's no one answer. I mean, if we just kind of stick with this, so right, we've got rental eviction, and then we've got this growing question around foreclosure, right? Homeownership foreclosure. If we just take that one topic and ask what's the right response, all I'll say there is, let's make sure we're students of history, right? Let's make sure we don't believe that the world today is happening out of the context of the world of yesterday. And so what did we learn, going back to 2008 to understand what we might be able to do today that's differently? And as you mentioned, Barry, I was at Fannie, and I had some really unique roles in the midst of this crisis back in 2008, including being part of the first team that went down to Florida to drive around and have the book in our lap and say, well, we own this property. And then to realize, oh, wow, that's vacant. And, oh, we got this one and that's vacant. And to see this emerging ghost town that was happening around the country where homes were vacated and no one knew about it. And then to really get into the data and understand how much of the loss in home ownership were folks who'd been in their house for 15 plus years. I remember at one very vivid moment, we had the full data of all delinquent folks in the country for Fannie, and we tranched it by seniority of home ownership. And the number of Black and brown folks who had been in their home for 15 plus years that were now about to be evicted was jaw-dropping. And it spoke to the nature of the product that they were given that should have never been given to them, right? And so so fast forward 10, 12 years later, here we are. I hope at some level, as we try to unpack the history, we come to a conclusion that we've got to stop it before we repeat it, right? So we're in a world where one of the market seized up. So we had many homeowners who had equity in their house. They'd been there 15 years. They were behind a year's worth of payments, but we didn't give them the chance to refi out, lever the equity they'd built for 15 years and keep the home. There's a very basic underwriting principle that we weren't smart enough to realize then. Are we smart enough to realize it today? We got to pay attention to the folks who are essential workers and just still don't have a job today and can't pay their mortgage, and yet we're great actors under their contract for years and years and years. I mean, are we really going to let the economic profit maximization curve of banks and brokers and others dictate real social policy questions? And so at Enterprise, we're asking these social policy questions. What is the upshot if we let individual actors optimize their own business curve? Well, the upshot is we're at the lowest home ownership rate among African Americans in 50 years. We lost all the ground gained during this period. The upshot is that there's something like 770,000 Black homeowners that would exist today if this hadn't happened. That's what Urban Institute projects. 770,000 folks that would have stayed in their home. In the light tech, so you got to ask yourself, they lost income, they're now out of home ownership. Where do they go? Well, our production curve in the light tech world nationally, we're building about 100,000, a little more than 100,000 units a year using tax credits. I mean, that's 7 years. There's 7 years of people who would eat up all of our supply, who just lost their home because of our policies around not understanding the truth of what was happening through this mortgage crisis. So again, I just come back to, there's 1,000 deep-rooted, hugely impactful questions, Barry, right now on what's happening. And just staying with home ownership for a second, boy, what's the answer? An enterprise any of us could just dig in for the next 6 months on one topic and try to get out in front and let history be our guide. But I think part of the challenge is there's so many places to be right now that we continue to just scratch the surface of 30 important topics rather than fundamentally getting to the core and deep-rooted issues that underlie these topics that we have to get to. So that's kind of a long-winded way of saying I hope where we're going at Enterprise as we look across the country and even here in the county is how do we push all the way through and get to the core root issue that's going on here, which is that we're gonna, if we let it play the way we did before, you gotta look at the other thing, which is how many folks now have credit that are damaged that can never get back to home ownership. We didn't solve that last time either. So that's why the Black home ownership rate and Hispanic rates keep dropping, because the credit dings hang around. And then the other implication is all the foreclosures in those neighborhoods led to lower values, led to new appraisals that brought other people's values down, that then put them artificially underwater, that created a cascade that we could see happening in real time. We didn't get in front of it. So again, today, what are we doing about declining values in neighborhoods? And how are banks and appraisals using that as a basis to permit a refi or to permit some other solution?
Yeah.
I don't know. I don't hear the discussion yet at these levels. So
Yeah.
So I'll stop there, but lots to talk about and lots to think about on this.
No, that's very provocative. Thank you, Brian. And you raised some awfully important points. One of the things I think that is important for us to think through is that the 2008 crisis in many ways was a housing finance crisis that bled over into the real economy, causing the recession, big rise in unemployment. And as you say, it was often the result of products that were designed more to strip people's equity and wealth than it was to assist them in their personal financial planning. This crisis is really a fundamental economic crisis that is bleeding into the housing economy because people are being thrown out of work or having their hours cut and unable to make the payments, even on mortgages that since Dodd-Frank aren't permitted to have some of the really predatory features that helped lead to the last crisis. But having said that, we find ourselves on the brink of a very similar loss of home ownership among people who simply cannot pay the mortgage, even when it's a well-constructed, stable, standard mortgage. The contrary thing is that in many markets, and I hope all of the panelists can address this, many markets, in spite of this, house prices continue to rise at, in some cases, an accelerated rate. Right? So there's an enormous amount of demand for home ownership at one level, and a tremendous threat of loss of home ownership at another level of income. And we're seeing a real, I think, exacerbation of the differentiation and stratification of the society by income, where those who can work at home and manage stay-at-home orders, who can keep doing their job, keep getting paid, have money in the stock market, can drive demand for home ownership and keep raising prices in a market where millions of homeowners are barely hanging on to the home they have, with no prospect of either trading up or moving out of their rental apartment into home ownership. And this is a distinguishing feature of this particular recession, I think, that you just touched on. And the structural long-term implications are huge and very, very important. So, Artie, this brings us to us. You broached this issue a little bit earlier. Can you talk to us some more about where you see the most urgent needs for federal and other assistance, and just how, as you're approaching all this work and the issues we're discussing, what path you would like to see policymakers follow? Artie, you may be on mute.
Sorry about that, Barry.
No
I think the urgent priorities of Congress are manyfold, but many of they're talking about in this, you just learned yesterday in the stimulus package, that they're, for our residents, additional unemployment benefits. That would, that's so important. And then for the next 3-4 months until we can see where the economy is going, and as everyone talked about, it's rental subsidy, because they can have all the moratoriums on rental evictions you want, but without rental assistance, it's just delaying a big problem, both for the residents and creating these back rent payments, or for the landlords in order to have enough funds to keep the properties going. So rental assistance, unemployment benefits. One other thing, just on the tax credit side, we do a lot of work with low-income housing tax credits. And if the Congress can fix the 4% rate at 4%, that would create 30% more equity, which means there's more funds to keep more development going on the tax.
Artie, let me interrupt. That's a great point. For those on the call who aren't LIHTC experts, can you just unpack that just a little so they understand what the issue is here?
Right. So even though there are two types of tax credits, there's a 4% by right, and there's a 9% that's a competitive. For 9% credits are fixed. The rate you get is fixed at 9%, but they say 4%, but it floats. Right now, the rate is only about maybe 3.07. So if they could fix it at 4% even today, that would, that's about 30% more equity, which is, it's a big deal. And many projects will allow more to go forward. It would maybe take less pressure off the state funding to have to put in a project. So that would be really important for us from Congress side. And also on the local side, we would like the state of Maryland to administer their unemployment benefits more quickly. We still have some residents that were through the last program that have applied and have not received their unemployment benefits. So it's for the state to get the money out faster. Another, the state also provides, like there's the 4%, they provide this gap financing or subsidy called the Rental Housing Works. And typically they get about 25 million a year. So we would want them to at least be able to keep that for this year or even more, because that helps more and more developments to move forward. And also when the state gets the federal stimulus funds to administer more quickly, because we've seen it, and it's just very hard to get them out. Some of it's because of the rules on the federal side about what all the has to be provided, but that was something we would like to see on the state side. Also, some of the funds that they get, they're not as flexible. There's some residents that aren't, they're immigrants. They may not be documented, and a lot of our residents are that way. And so the normal funds that we get from the federal government aren't targeted toward that important group. So we like to have funds at the state level that are more flexible, that can go to residents that may not be documented. So those are some of the key things we'd like to see to help us take care of our residents better and to make the properties run better.
Barry, can I ask just a friendly, so I like a lot of what both Artie and Brian noted, because they're really getting at equity, right? And we haven't talked about it, but it's the undercurrent here. And I think I think Brian was pretty explicit about what we're seeing in terms of not just losses in home ownership among Black and brown folks, but what winds up being an opportunity for wealth creation. And I think Artie notes similarly that when we're talking about immigrants who happen not to be documented, we're acting as if wanting to live here all of a sudden in the United States is a crime, and doing every single thing you can to get over here is a crime, and criminalizing those persons and their entire families as if they're not actually contributing to this county, this region, our state, and the nation itself. And I think that kind of starts to point at some of how we should rethink our relationship with customers, citizens, whomever. And I think without that, certainly Brian talked about it when we're considering people for mortgage opportunities, but certainly when we're considering how we treat persons who are having some challenges as a consequence of job market and similar things, who might lose their homes or be evicted from their homes. I think those things are incredibly important, but we've been saying this for 12 years, right? And so Brian's missive about whether or not we're going to learn from history, is right on time. The only, and yes, your points about the economies and how they're structured in 08 and now, obviously valid. But the thing that exacerbates it is the pandemic. We have to recognize that whatever recovery we had was a tepid sort of retail-based recovery. It clearly wasn't all that strong because we lost tens of millions of jobs in just a couple months, right? And so what are the fundamental things that we're going to do differently? And that can't simply be more funding going to business, less going to homeowners and renters, and we hope and wish it'll all go away.
Yeah, but an excellent point. I think it's worth pointing out the National Association of Hispanic Real Estate Professionals and Urban Institute have done some work, and the disparate impact of this crisis on communities of color isn't just restricted to the consumers, but especially in the smaller landlord space, it's more disproportionately represented by owners of color, people who have tried to follow the ladder of opportunity by acquiring a property or several properties, operating them as a business to supplement income or be their only source of income. And those owners are being disproportionately hit by this economic crisis as well. So it's a double whammy in a sense for communities of color. And thank you for raising that point as well as you did. Two questions I have. One is, and maybe Frank, you can address this. Landlords who aren't collecting rents are expected to make all the other payments they're obligated to, utilities, but particularly I'm interested in property taxes, which of course are in many communities the lifeblood of local financing for education and other needs. Are you seeing a drop-off in receipts? Are you expecting a big drop-off receipts? We're sort of coming to the time of year when property taxes due. I know I'm getting my property tax bills for my home. How is this likely to ripple across county and state government if we don't get relief to these residents quickly so that their landlords can meet their obligations.
Say everything we've had, and we've had an effort to do some outreach, focusing on landlord, small property or multifamily property distress as well. From the county's perspective, it's too early to tell if we're going to see drop off. The fundamentals in, home ownership, real estate taxes are going to get paid by the mortgage, servicer. Small properties are stressed, but at this stage, it doesn't feel like they're stressed to the point where they're going to risk tax, short payment. But it's absolutely a concern. We've looked at it in condominium and shortages in assessment payments, which are actually not materializing at this point. So, as Stacy touched on, even on the rental side, a lot of the households are making payments. They're in arrears, but not arrears by 8 months. We're finding average arrearage in our rental assistance, under 3 months of total arrearage at this stage of the crisis. So, it's an evolving challenge. Small landlords are specifically, and as you said, that this is a community that really doesn't have the reserves, doesn't have the capacity to withstand this for very long. And again, we're hoping rental assistance backfilling the past due rent is the most direct and immediate response mode we have at the moment.
Great, thanks. Any other panelists want to respond to that or talk about what you're seeing in the market? All right, let me remind the audience that we have the opportunity for you to submit questions in writing through the Q&A button on the bottom of your Zoom screen. And we've had one question sent to us, a couple questions sent to us. One of them as follows: some landlords are not renewing the lease of their clients regardless of them paying off late rent or not. Often these clients don't have the means to move to a new location with a security deposit, high risk credit, and so on. How do we counsel? Number one, how widespread is this, and are panelists seeing this across their inventory and their communities? And how do we counsel these clients, these residents? How do we address a problem where a landlord is just, I guess, exiting the business or trying to cut their losses?
I'll just add one perspective on it, which is, in the court process, these are considered tenant holding over cases, where if the landlord does not renew and they have no obligation to renew, so any lease can expire with no obligation to provide anything other than 60 days notice. The CDC moratorium, the governor's moratorium on evictions, only protects failure to pay rent. So any tenant that's behind on rent that comes to the end of their lease, the landlord does not have to renew, and then they can take eviction action, even though the governor's order protects on failure to pay rent, but it becomes a different category. There's a series of efforts that have gone on in the state, and particularly focused on supporting Montgomery County, to allow some protection for just cause eviction, requiring that in the event that a tenant has not violated their lease, that landlord would have to provide an extension or renewal of lease unless they had just cause to terminate. But that is not the law today. We are hearing more of that as an issue with tenants who are behind on rent, who would otherwise have protections. So it's a long-term issue, but it's very specifically an at-risk issue in the current period.
Yeah, I'll add in, because I think Frank got it, he got it right, said it well. But just, one other perspective. So at Enterprise, we're probably one of the 10, 15th largest nonprofit affordable housing property managers. Okay, we're just in the Mid-Atlantic here. So we very frequently ask ourselves, is our obligation to the resident or to the unit? Before the crisis hit, we had 1,800 people on a wait list who were housing needy folks, deeply needy, needed to get in, needed an option. We didn't have an available unit. Okay, so now we're in a tough world of having a unit where I've got someone waiting to get in, and I got someone's in that can't handle the rent today. I think the challenge has been we're asking property managers to do too much. I mean, I think there needs to be another industry that helps folks get to the next get to the next thing, whatever that thing is. We didn't deal with it with home ownership before. You got evicted, you got foreclosed on. It was your problem. You were on your own. I think we're in this world now where we have core disruption. We have people who don't make the income they made a year ago when they qualified for their apartment today. And every month they're digging a hole, and it's not their fault. Structurally, there's been a change. So what are the systems that are in place to help figure out an answer for that person? And I think our conclusion so far is the landlord can't do it all. I mean, it's hard enough keeping the building going, dealing with the questions, trying to keep people safe. We're seeing cases every day at this point, managing the health load of this, trying to help out in tying people to collections and support and eviction prevention programs. And then to wonder, how do we also solve, where do you go to next, knowing that where you are today just doesn't fit your budget today? I don't know the answer, but I just know it can't all be on a very tough property management business that was tough before we got to COVID.
Yeah, I don't disagree with what Brian just said, Barry. I will say though, we're only doing three things at HOC. We're getting people housed, we're keeping them housed, and we're helping families and individuals reach their fullest potential. 2020 is the year of keeping people housed, right? Into 2021. And I keep saying this, right? Housing is the bedrock of our community. Folks don't live somewhere, they're not waking up somewhere, and they're not going to sleep somewhere. There are other disruptions. And we're going to pay the cost. We already know this. We still persist though around not avoiding acknowledging housing as a right. And so we had a nice ladder of housing affordability once upon a time. Tax code change of 1986 changed it radically. I mean, even prior to that, essentially gutted. But when the Reagan administration, introduced tax credits and essentially jettisoned much of the support for technical public housing, it was done. And so I don't think that Brian is wrong. We do have to have supports for folks, but we actually have to have supports. We can't just, again, we can't wish it. We got to roll up the sleeves and make this thing happen. And if the federal government isn't going to acknowledge it, then our state has to actually get to the table with a real housing plan and be aggressive about it. And our local jurisdictions have to be aggressive and cooperative about it. It can't just be the housing authorities. It can't just be the affordable housers. This is something that impacts our entire community. And as Brian pointed out, not just the value of property, but the trajectory for performance around community.
Terrific. Thanks, Stacy. That was well
So,
said.
so Barry, a little bit,
Go ahead, Artie.
yeah, a little bit related to that, also about equity and what we talked about, what can be done on the local level. I think Montgomery County, some of the other surrounding communities are working around trying to get zoning. There's this pushback about having affordable housing in some of the higher end communities, and that's been on working through that. And then Frank and DHCA, we're talking a little more is like the county's program of this 15 or 12% MPDUs, but those MPDUs are typically either at 65 or 70% AMI. So how do you get affordable rentals in the Bethesda area that are at 30, 40, 50% AMI, that not just through the nonprofits, but through the market rate developers? And so it's a challenge, but maybe on that, I'm just throwing this out, maybe the baseline is the 60%, the MPDU, but then maybe from a policy, if the county or wants some at a lower than that, maybe there's incentivizing. I mean, you can't put it all on the developer, but maybe there's some subsidy to create in some stratum in that MPDU, so that they're in some of the higher end communities with some of the better schools and some near metro, near that families that make 30, 40, and 50% AMI can also live in those communities. So how do we work to that? And that's also a discussion.
Great, thanks. So we have two more questions have come in on the chat, and I want to ask Frank to take one of them, and then we're going to wrap up by asking each of you to address the last. So Frank, The question is, how do individuals apply for help still available up to December 31st, and where can they obtain the paperwork to apply? I'm not sure specifically what this refers to, but obviously we're all looking at this ticking clock to the end of the year. What advice can you give our audience member on that?
Well, it's advice to the inquirer and anyone else that knows or works with folks in need of rental assistance. So the Department of Health and Human Services, DHHS, has a COVID rent relief portal. They have discontinued taking applications for their CARES Act money, which has to be distributed by the end of this year. They are accepting wait list. So the idea is to go onto the website, COVID rent relief, Department of Health and Human Services, and anyone that's in need of rental assistance can register that interest. They can also call 311 if anyone's facing.
Okay, so Frank, I think we've lost your connection, or it's become unstable. You've frozen here. Let's get back to that. Meanwhile, let's in the time we have remaining, let me just go on the lightning round here with the last question. And the question is, in your opinion, what federal housing issues should President-elect Joe Biden and the Congress concentrate on first after he's sworn in on January 20th? And let me just go around. Artie, you want to start us off?
Well, I think we've mentioned a lot of them earlier today. The making sure there's plenty unemployment funds for residents, and then we talked about the rental assistance, and so I think I would start with those two.
Terrific, thanks, Brian.
Boy, where do you want to start? But I think there's an easy message just day one, and I think if it's day one, it helps a lot, and it's to say, look, we know there's been a lot of talk about maybe the suburbs shouldn't be places of potential occupancy by lower income folks in our country. And there's been a lot of rhetoric and a lot of talk. It was literally part of the Republican National Committee's platform and part of their convention. It was a moment dedicated to this conversation about, is it okay to open the suburbs to low income people? I just think the damage of that message hanging around for months and months and months is going to take us so far back in this industry that we may never recover. I think this administration, it's not an executive order, it's not a law, it's a day one message. Guys, the Supreme Court proved that messaging is against the law. We're not going to be a society that segregates based on race and economics intentionally any longer. And simply draw a line in the sand. So that's where I'm coming from.
Terrific, thanks. Stacy?
Sure, what Artie said, what Brian said, and also the fact that FHA is likely to become the lender du jour as we approach a liquidity crisis. And so I think Biden administration really needs to focus on how to make sure that process is efficient, timely, and the loans themselves are distributed geographically in an appropriate manner. I think twisting Treasury's arms and actually having all the tools at Treasury be brought to bear so that they induce individuals for bond issuance that's appropriate to the time, like what we saw in 2008 and 9. Of course, the tax credit itself, and I think, rounding to HUD in general, fixing some of these policies that have been sort of temporary solutions around inspection, around fungibility and flexibility, and making those sort of permanent fixes so that agencies can actually go about the business of housing folks pretty aggressively. And I think broadly calling for states themselves, along with QAPs, to actually have real housing plans, deal with volume cap issues for those states that are not expending all their cap, offering the opportunity for that cap to be sent to states that are in fact expending that volume cap, and trying to keep all of this in an effort to manage the current crisis, but make sure that affordable housing has its continuous day in the sun, because what we can't do is shut down our affordable housing development pipelines, as it'll be more expensive, and quite frankly, much more unlikely that efforts will come to fruition once the economy starts going again.
Terrific, thanks. And Frank, if you've gotten back online, you get the last word here.
I don't know how many of my other words, but for rental assistance, it's the COVID rent relief website. But just for last words, yeah, this is a political issue. I mean, we need a lot of support for these things that we're talking about. And it is all about getting to recovery, getting through, where we're at. But then, the investments are well known. Everything we're talking about, we can put numbers on. We know how much it costs to get from a, 60% income down to affordable for 50 or 40% income. We have 25,000 people in the county spending more than half their income on their housing. We know a lot about what we need to do, and we look forward to learning from this and directing our resources to the recovery as soon as we get through it.
Terrific. And I would simply add to the question, announcing an extension of the CDC moratorium as quickly as possible, if that's not done before the end of the year, I think would be an important safeguard, an important act for the administration to take. I'm frankly baffled why it hasn't happened already, but it hasn't. And I think that should be also job one for the new administration. Let me thank all of you who tuned in to hear this conversation. And before we finish, let me ask Barbara if she has any parting words before we sign off.
So I do want to thank all of you, and we'll probably have panel number 3 on this, so get ready. And certainly, Barry, your point about extending the moratorium, it's just baffling that nothing's been done up till now. January 31st, I believe, is now the new date. Am I right? That
I think it was through year end. So I think a lot of landlords are lining up to push their filings through as soon as the calendar turns into 2021.
Well, we have to work on that one. And I also want to recognize Diana Eisenstadt, our executive director, who was instrumental in putting all of this and everything else we do together. So thank you for that. Look, these are tough times, and they're not going away anytime soon. There is a light at the end of the tunnel, a very awful tunnel that is 4 years old, quite frankly. And I believe that we have endured, and we will move forward, and we will be successful in doing that. So God willing, we'll be able to have an in-person Affordable Housing Conference Summit. But until that time, we will continue with our Zoom calls. We will continue with having the experts speak, because today I think you can all agree that every single panelist and moderator, in fact, are experts. So I want to thank you so much. And Barry, once again, thank you. It's always great seeing you. I hope you realize you're part of our extended family now, and I'm reaching out to all of you, Stacy and Brian and Frank and Artie, to stay with us and continue to be part of our family. And with that, I think, unless Diana has anything more to announce or say, we'll say have a great weekend. Keep your masks on, wash your hands, keep this hand sanitizer close by, and try to get some outdoor exercise, albeit with your face covered up.
All right. Thank you to all the panelists. This was terrific. Thank you for the privilege of helping to lead the conversation. And best of luck to everybody, and stay in good health and have a wonderful holiday season.
Thank you.
Thanks so much.